Hi, everyone. I wanted to share my 2 cents on the earnings report from General Mills yesterday because there are a few things we can learn from it. They missed on the top line with revenue declining 3% in the quarter and 2% annually. They beat on operating profit and EPS, but at staggering declines. Op profit in the quarter declined 35% and EPS declined 46%. In North America retail, which is their largest segment, saw their reported net sales decline 10% in Q4. But it's what they mentioned in their guidance that stood out to me. They're expecting their 2026 net sales to be plus or minus 1% and op profit and EPS down between 10% and 15%. So, with that expectation on net sales relative to that expectation on op profit, that suggests significant margin erosion. And they cited a quote, challenging consumer backdrop as one of the primary issues in their business model. But they mentioned something that raises even more questions for me about their potential to achieve even this dismal 2026 outlook. And that is that they expect the growth in the categories in which they compete to be below their long-term projections. So remember, they just closed a year with net sales down 2%. And yet, with a challenging consumer backdrop and category growth assumptions below their long-term projections, they are expecting improvement on the top line to plus or minus 1%. And coming off of a quarter where their largest North America unit saw sales decline at 10%. Wall Street didn't like what they heard, and the stock has dropped 5%, but I'm not sure that that fully represents the level of risk inherent in these assumptions. What do you think?